Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, and we are now September 3rd, 2019, at about 4:35 p.m. Central Daylight Time. As you can see, the stock markets start off the month of September on a down note. I think we're all looking at questions about trade. The tariffs went in on September 1st that President Trump had put on a large amount of goods. He did not take the bait, maybe that's the right word, when Tesla received a reprieve from China last week. So what we've got as a situation is we don't know where this meeting coming up mid-month is going to go. We don't know what the European Central Bank is going to do at their next meeting. After that, our Fed comes out, and there's a number of our Fed members that are not in favor of lowering rates again, and there's a number that think we have to just get on and get it over with. Where do you go with it becomes the question. Another interesting event, while we're looking at bonds and notes, and they're within distance of hitting all-time lows, especially in the 10-year notes and other items, we're watching corporations starting to really come out in a major way, issuing some long-term debt. I mean long-term debt, and it is starting to compete with U.S. Treasury debt. And the reason is, if it's a big corporation, are you better off grabbing that half point, whatever the heck it's going to offer? You'll read about that in the morning. It's John Deere, but those of you that get my newsletter, I've already put it in there for you, so you'll get it. I don't want to offer everything here. I like my newsletter to have the commentary part. So we come back, the dollar's a little stronger, metal markets explode to the upside, copper markets still staying quite weak. So the question is, where are we on trade, and how long can the stock market hold up here before we start worrying, is the Fed enough to support the market, or is world trade bigger than everything? That becomes part of the question. One of the things that I'm noticing is the market is stalling at the 18-week moving average of closes. That's this red line right here. When I take a look at a daily bar chart, we have this area that we keep coming up to and slipping from. That's probably the right word. Now, I'm sure chartists will get bullish if the market were to say, let's say, close over 2960. They'd say it cleared this whole hurdle, and that number's right through here, would give them maybe enough breath. When I look at what the trend is up. The trend is up because the market has a pattern of higher lows and higher highs as defined by the swing line. But when I use the swing line, I filter it with key moving averages. And the main one that I filter it with is the 18-day average of closes. Now, if you take a look, the market finished at 2905.90. For those of you that do get my newsletter, what I wrote about this morning, I said, you pay attention to that. You're in a number of markets that have come down to that average and they're holding it. And I see the 100-day average acting as resistance as it's bouncing from that number. The market started off, as you can see, higher. It got as high as 29.26, then fell and then came back on it. We'll see what it does from there. But so far, how I'm looking at the market, the trend up is defined by the swing line. The bias is up because you're over the 18-day average. To break that right now, you'd have to get under 2851.75, and that would put 2838.75, the lower Bollinger Band, in play if that were broken. Not taking that out gives you the first level of resistance at 29.15, and then you have the next one at the 29.60 level, the upper Bollinger Band. In terms of momentum, you're overbought. So we have a market that's overbought in an uptrend, upside bias, and fighting a battle between the 18 and 100-day average of closes. When we come to the NASDAQ, you finished at 7617.5. So even though the swing line is up, similar to the S&P, the fact that you closed under that 18-day average means to me that the market lost its upside bias. It can gain it back by closing over it, but the market acts. It's just acting like it wants to correct, and that's what it's been doing. It's pulling back right here. You had a 73 reading on Friday, and now you're quickly getting out of an overbought condition. Battleground, I'm going to repeat it. I think the 18 to 100-day average the Bollinger Band just start going sideways here as investors try to figure out what to do next. The Dow is very similar to the S&P. The market, first off, finished at 26,122 over the 18-day average. The first break to it held it, and the resistance is the 100-day. The upper Bollinger Band is the secondary resistance. Trend up, bias up, and like the S&P, an overbought market until both numbers get under a 70 reading, similar to what they're doing in the NASDAQ. We then get to the Russell, which has the swing line up, higher lows, higher highs, bias down, momentum sort of tried the upside last week, gave it up, and it hasn't turned down or up. I'll call that neutral. So I don't see much going on here. This continues to act like the weakest of the indices at this point in time. You know there can be rotation whenever. In the VIX, the market has had a lower low and a higher high. Momentum has been flat. You got away today from. You rallied right on up and over and never did challenge that 18-day average of closes. So the bias is up. Momentum is pretty flat, and you're not trending in this market. In the bond market, we have a pattern of a lower low and a higher high now. Today's high, maybe I'm wrong on that. I think I am. This high was 166, right here, 25. Yeah, I am wrong. So when you look here, yes, the swing line because of the bounce is turning up because you're going to look at how it did right in relation to this. This low was 166.5. We then rally. We then break under the 166.5 and we rally back up. So as we're coming up, you don't have to take out that high. You've got the swing line pointing up, and yet you've got the higher high. So you've got the lower low, higher high pattern in plain English, where the market just sort of drifting in this in an overbought condition that is not trying to convert itself at this point to locking in and saying, okay, another level to the upside. Just hasn't done that. In the 10-year notes, we might as well start right here. You're overbought. Both numbers are not going sideways over 80, and any reading over 70 when that's not occurring is overbought. Second part, similar to the bonds, you've got that lower low, the higher high. You've been fighting right here at the upper Bollinger Band. The bias is certainly to the upside, but you're in a resistance zone. When we come to TLT, the story is one of divergence. You have momentum turning down. You have price action with higher lows and higher highs, but if you were to have an inside day or take out today's low tomorrow, you could have lower highs, and if you took out this, you'd have a lower low. This market's giving us no indication. I'm going to call the bias up and that the bulls have control of the market till you take out 146.13, but I'm very disturbed by that momentum, because momentum often turns before you see price turn. In the dollar index, coming in on Thursday and Friday, you had up days where you closed over the upper Bollinger Band in a market that's overbought. That's often a sign this dollar index does not like to stay outside of the Bollinger Bands. And all it did today is it pulled, closed at 98.94 under that band again. It has not given up that thrust that it's had, but it is an overbought territory. It is making new highs on the move. You don't fight anything like that. Contract highs are contract highs. Are we trending to the upside? No, we've got a thrust to the upside. What would you do if you bought? If you put a stop under the most recent low, it's 97.37. That low was 1, 2, 3, 4, 5, 6 business days ago, and we haven't had a lower low. I'm not complaining about it. I'm saying it's got that up thrust, and it's been over this 18-day average. You know the bias is up. The eurocurrency is the flip-flop. Now, they're having a nightmare at the UK. I prepped you for it last week, and I said, you watch. As soon as we come back, you're going to see that the Parliament's going to go crazy there with what Boris Johnson is trying to do. And they just are going to vote tomorrow. And it looks as though they have enough votes to take power away, that the Parliament has to work under what Parliament says, not what Mr. Johnson does. He could call a general election. Nobody knows where this is going. Are they going to get another extension from the EU? Is the EU sitting back and going, they can't get their act together. We don't have to do anything. It's weighing on this market, and I think the market's getting concerned. Will the ECB be aggressive enough? In my opinion, they have never been aggressive enough under Mario Draghi. It's that simple. They don't get in front of the curve. They're always behind it, if you will. So you got now market that is fighting right here, closed at 109.78 under the Bollinger Band bottom. We're oversold, but you could embed. Now, what is embedding? Both numbers today finished under 20 in the slow stochastic. They were both under 20 on Friday, and they were both under 20 on Thursday. You have an embedded reading. You got your 3 days. So until the red line closes back over 20, I say that the rallies in the market, and this takes over everything else on the chart, rallies in the market start looking as though they're going to encounter selling. Pivot points might come in, something that you want to look at on this. In the pound, we've gone from the Bollinger Band high right back to the low. And I feel pretty good. When this market was up here, I was pretty clear here. I said, I think you're in a pretty big resistance area. And now that you're down here, I don't know. It's like every single day is going through a major Fed report or something. It's a hard market to trade. But in terms of taking the name off the chart and just looking at chart patterns, lower highs, lower lows, down to the lower Bollinger Band. Often that is where pros take some money off the table. Resistance back up at 121.67. You would break the downtrend if you got over 122.40 and you are not oversold. You still have this market pressing. Is it going to use this opportunity of somewhat sideways action? I couldn't call it classic, to try to break out to the downside. Remember, the bears have control of this market now. In the Japanese yen, battleground is the 18-day average of closes. If you count how many days from back here you've hit it, you went on Friday without hitting it, but all the other days you've been hitting that number since way back here. Now, this is a market looking to see what it wants to do next. In the process, the Bollinger Bands are going sideways, so throw the name off the chart. We know this is a safe haven type of play, but is it warranted right now? You have a lower low, higher high stuck at the 18-day average in an oversold condition. Bitcoin acts like a market that has run out of the downside. Now this is September. I've got this labeled as August. I'm wrong on that. I forgot to change the name. But I am correct. This is the September Bitcoin. Excuse me. I'll get that fixed. And the market negated its downtrend. You got the lower low, the higher high. Forget that it's August. Ira's mistake. I didn't see it. In November, Brent versus WTI. You're playing at this 417 level. It's back and forth. The market's trying to figure out what does it do. We saw U.S. crude take it on the chin. Now, I watch people that are all saying, well, it's because of oversupply out of OPEC. Nonsense. It's Hurricane Dorian, in my opinion. That's what I would say on television. Why? Market, it was building in the idea that that storm could cross Florida and get into the Gulf, and they started bidding it back up. And you'll see that when we look at prices. Let's get rid of today's action. Friday's when the market took a trek that nobody knew. If we take that out, you were starting to rally. The news was all about what was going on. And this is Brent. This isn't WTI. Keep that one in the back of your mind. What happened now is we're hearing that OPEC, we are watching a bit more production that they had at the month of July. We're hearing the Russians are really fighting. They want more production coming out. That's weighing on the market. It was able today to do okay. It finished 58.26. The pattern's a higher high, lower low. The bias is down and momentum is down. If this market breaks any further, look for the lower Bollinger Band to be an attempt at what? Potential support with resistance 58.97. The market that got hit, the one the hardest, was the WTI. Now, this was your storm market. And you may not agree with what I'm saying, but you did go from 52.96 all the way up to 56.89. And gee, that was Thursday. And if you go back to that time frame, we were worried, was that storm going to come right over Florida and into the Gulf? And we had heard 95-degree temperatures. The track started changing on Friday, and the market pulled that part out. And I think I said that in this video. Today, when we come in, the Gulf's not in problem at all, and boom, you went crashing down. You missed the lower Bollinger Band by one tick, 52.83, 52.84 the low. I think the pros took some money, but this is a downtrend market. unlike the Brent, you have lower highs. Now, 52.96 was the previous low. You just hit 52.84, and you've had previous lows. It's acting bearish, and it's still acting that way. Resistance back at 55.05. In the gasoline market, you came in like this. Now you get the storm not coming at you. Your end of Labor Day, you go cracking down to the lower band, and then you get a late day bit of a bounce. But and when I say bit, you got as low as 144.75. So getting back to 147.05 is all right. But I think we nailed it when we said this rally, storm related, and this is the last big driving event that we had. Yeah, people keep driving, but I don't care what the numbers on API or EIA come. And I know the kids are back at school. I couldn't get to work this morning when I wanted to. Very difficult, so many on the street. In natural gas, that storm, if you understand how these hurricanes work, they can pull heat with them. And it's pulling the heat with it from Louisiana further south, and that's making the need for the air conditioning. So you're getting this rally at this time of year that normally it just sort of stalls here. But this was a breakout. And it's been happening for about 3 days. If the market continues, does it get up to the upper Bollinger, to the 100-day average and stall out there? That'll be the question. If you take out 225.70, then I think this, if you will, this excitement of the hurricane may have run its course. So I think the bulls have to keep the higher high, higher low going and keep running the upper Bollinger Band to keep the trend in place, and it is overbought. Want to remind you, I keep talking my research because I spend the day sometimes writing 2 reports. I want to get a report out between 11:30 and 12 every day where I cover what I'm seeing in the morning market, what I think's leading up to the afternoon, and then in the evening before 8 p.m., I write and have in your hand another report telling you what tomorrow's U.S. data is there anything big coming out of Europe, and so on. My reports will look just like this. You can read them in our trading platforms. You can read the email I send, so on and so forth. Then for those of you that understand window envelopes, I include the daily window envelope numbers. Audio, I put out 2 audios a day. Now we're in September. I'm back to doing that. And you can see what we're doing. Now some people like just the commentary, not the trade recommendations to come with it. You get to see as a free trial the whole thing if you haven't tried it. So to get it, just simply give my staff a call. You can go to our website at www.iraepstein.com. All you need to do is click on free offers. You'll get there. You can click up here. It'll take you right to the page for the free offers, and away you go. Sign up, and we'll get it into your mailbox. And you should try the platforms we have, especially the mobile. Pretty interesting. I'm Ira Epstein. Have a good day. Sorry it's so long, but there's a lot to talk about on the first day.